Hello, this is Connie Belden, and we're now going to wrap this chapter up by preparing an absorption income statement and a variable costing income statement. So assume the following information is given to you. Beginning inventory in units is 0. You actually made or produced 40,000 units, but only sold 35,000 of them. So I made a note to the side that when you take the difference there, that does mean that you still have 5,000 units in finished goods ending inventory. The selling price is $76 per unit. For selling and administrative expenses, $2 is variable and fixed totals $556,000. For manufacturing overhead cost, materials per unit are 14, labor per unit is 6, variable manufacturing overhead per unit is 3. Now, fixed manufacturing overhead is given to you as a total for the month of $720,000. Okay, let's do the absorption income statement first. As we discussed in a previous video, the cost per unit in the absorption income statement includes 4 items. Direct materials, which is given to you at 14, so I'll bring that down. Direct labor, which is given to you at 6, so I'll bring that down. Variable manufacturing overhead, which is given to you at 3. And it does include fixed manufacturing overhead, but we want to get that per unit. So I take the total fixed manufacturing overhead of $720,000 and divide it by units produced, not sold, units produced of 40,000. So I did write it out to the side here. So $720,000 in fixed manufacturing overhead divided by 40,000 units produced is $18 per unit. Now you have it all per unit. So I will add 14 plus 6 plus 3 plus 18. The cost per unit using the absorption method is $41. Okay, let's make the absorption income statement. Remember, you sold 35,000 units, so the income statement is based on 35,000 units. And it did say the selling price was $76. So I actually wrote it out here for you. So 35,000 units times $76. I think I put an extra 0. Let's try that again. 35,000 units times $76 is $2,660,000. Now, remember we came up with the cost per unit of $41. Remember we sold 35,000 units. So 35,000 units, cost is $41. And I wrote it out to the side to help remind you. The cost of goods sold is $1,435,000. Now, let's subtract for gross margin. And gross margin is $1,225,000. Now, we're going to go ahead and just group the variable and fixed selling and administrative expenses together. So I did show how I do the calculation out to the side. Fixed selling and administrative are $556, so I started with that. And variable selling and administrative is another $2 per unit sold. And remember, you sold 35,000 units. So I took my fixed of $556, and then for the variable, I took $2 per unit times the 35,000 units sold. So my variable part is $70,000 plus my fixed part of $556,000 gives me $626. Okay, then I will subtract. And my net operating income is $599,000. Okay, now let's prepare the variable costing income statement. The variable costing income statement only includes these first 3 items. It does not include the fixed manufacturing overhead. So it would include the direct materials of 14, the direct labor of 6, and the variable manufacturing overhead of 3. It does not include the $18 fixed manufacturing overhead. So under the variable costing income statement, the cost per unit is 23. And I will make that correction here and say variable costing income statement. or I should say variable cost per unit. Okay, now let's go ahead and put our income statement together. Sales are the same as they were in the absorption income statement. So we would take 35,000 units sold times the selling price of $76. Now, for the variable expenses, and I even mapped it out here, remember the variable cost of goods sold is $23 per unit, and we sold 35,000 units. So 35,000 units times 23 gives us 805,000. Now, don't forget you want to group all your variable expenses together above the contribution margin. So the variable S&A is listed separately above the contribution margin. And remember that the variable S&A is $2 per unit sold, and we sold 35,000 units. So 35,000 units times $2 per unit is 70,000. So when we add the two together, our total variable expenses are $875. Subtract that from sales to get a contribution margin of $1,785,000. Okay, next we just subtract out our fixed expenses in total. Fixed manufacturing overhead, if we go to our initial information, is given at $720,000, and fixed selling and administrative is given to us at $556,000. I will add those two together and then subtract from contribution margin. And notice that our net operating income with the variable income statement is $509,000. Now that difference is only temporary until we sell those additional 5,000 units that are in ending inventory. Notice with the absorption we got $599. Notice with the variable we got $509. There is a difference of $90,000. That's attributed to there are 5,000 units that we still haven't sold that have fixed overhead of $18 each. And so that is how we have the difference of $90,000.